Welcome back, everyone. This is Thomas Triple T Ty with another new bullish crypto analysis. Before we dig in and take a look at Bitcoin's daily charts and analysis, remember this is for edutainment only and not to be considered as financial advice. Additionally, when you feel value has been added at any time during this video, feel free to smash the like, ring my bell, hit subscribe, and share your thoughts in the comments section or on Twitter. And also share my analysis with your friends and family. Help them get involved in investing. All right, let's dig into the news first, and then we'll dive into the charts. There was one article that I found interesting. It's on thedailyhodl.com, and I'll include a link in the Twitter thread for this video. In there, the co-founders of Glassnode, they mentioned that Bitcoin is in the eye of the storm. And what they were talking about was that Bitcoin, there's mixed messages in Glassnode's latest newsletter. And there's seeing that in the altcoin area, there's potential for capitulation. However, if you look at the on-chain data for Bitcoin, it's been saying this for quite some time, but they're showing outflows from exchanges, meaning that there's more coins leaving the exchanges. So for long-term storage, and so there are less coins on the exchanges to be sold. And they shared a chart. Let me see if let me move this over so you can see it. Here we go. I might switch screens so you can see it. Here's a chart that they show. This is the Glassnode's net position change, and whenever this net position, this red bar here, these bars here, whenever it goes really far down, price tends to rise. So here you have it went down here, price rose, and then here again, price pumped. Here again, so they're expecting price to pump, but at the same time, they also mentioned the macro environment with the equities market being impacted by macro environment factors like inflation and the invasion in Ukraine, China, etc., etc. They're saying that Bitcoin or the crypto could be pulled down with the macro environment and the equities market. So we get mixed messages, and we've been seeing that for quite some time now. So it's nothing new, but it's interesting to see other people's perspective as well. So with that, let's dive into the charts and take a look at the current crypto market. Much better today than yesterday after Bitcoin pumped at market opening. Bitcoin is currently 40.8.9K, 41, back to 41 dominance here. It moved up. Ethereum still hanging around 3K, dominance 19.45. A lot of greens out there. Luna pumped, 14, 16% after it hit like 75 or so last night. So yeah, good day. Let's take a look at the market cap here. Market cap, look at that. We're finally back at 1.9. We were below it for days. And that's a plus 2.58% increase day over day. So more money is flowing back into the crypto market. Let's take a look at the daily chart here. And so you have the last time I did Bitcoin's analysis was the weekly chart yesterday. So in the meantime, it's printed several daily candles here. So we see that here's the candle from last night. For this candle, this red candle here first, it broke down below the ascending triangle support, the body of the candle. That's big because it hasn't done that I'll show you, in a long time. All the way back here. This was January 22nd was when the last time it wicked down, but there's no full body of the candle breaking down below. This one kind of, not really, but that's the first time. And then it broke down. On the next daily candle, it broke way down, and this is around 38.5K, the bottom of the wick here, and then bounced back up. Now this is a fresh new candle here, and it's so we got potentially two bullish candles here. On my weekly chart, feel free to check that video out from yesterday. I mentioned that there are two factors playing here. So we know that when it hits this bottom ascending triangle support, it has a tendency to keep rising above. And every time we hit it, after some consolidation, it pops up. So here, it pops up. Here, it pops up. Back here, it popped up. So that's one factor. So this is a really good indicator that it could pop. But at the same time, on that chart, on the weekly chart yesterday, there were several, the majority of the indicators were pointing bearish. And so it explained this one right here, the move down to 38.5. So could we pop all the way up to the ascending channel resistance up here? That's a strong possibility. That's why I kept this bounce here, this line here. So it looks like we're trending towards that direction. The question is, how many days will it take to get up to this upper line here? Or are we going to break back down again and consolidate in this horizontal channel here? So let's take a look. So when the wick itself came down to this highest trading level, price level here, this red horizontal line at roughly around 38.7K. So it went down to there, crossed below it, bounced back up. And that wick right there is near the bottom of the Bollinger Band, which is, what's the bottom there? About 37.7K right here. So currently, these candles here are still below the 50-day moving average, which is currently at 42.2K, and below the bull market support band that's descending, and also below the Bollinger basis line here, and that line is at Bollinger basis 42.7K. So that's 42.7K right there. So it's still within the bearish territory because it's below the all those indicators. So let's take a look at the volume. The volume down here. The previous volume for this big candle here that dropped to 38.5K and bounced back up to over 41. That candle was above the moving average for volume. So that was positive. But then you look at the current one, it's tiny. The 3, 4 ones before that, below average. Now this one, more than likely it's going to be below average. And you notice how the candle just turned red right here, right there. Yeah, so it's so thin right now. So let's drop down and take a look at the indicators down here. For the white J line of the KDJ, you see how it curved up, bounced to the blue K and the red D lines, and then bounced up. So it was at 35.36 when I did this chart, and it's now, what is it now? 57.9. So yeah, it's gone up since I did this chart. So I gave it a bull here. Let's go down to the MACD. MACD, the white MACD line, round at the bottom, the local bottom, is somewhat flat, but there's a slight incline in there. I'll just maximize it. You see this slight incline right there? So it rounded the bottom. There's a slight incline, and it's at negative 815, and it's been trending down since March 30th. So it rounded the bottom, and it's still below the red signal line here, and it's putting in the 15th consecutive bearish histogram bar. But notice that it's rounding up, meaning that the white line will likely cross the red line in a couple days, and then print more bullish histogram bars. So in the meantime, I gave it a bear. Down below here, the red RSI, this RSI line here, and also the blue CVD line. They're both really pretty much chopping up and down sideways, oscillating up and down sideways. And currently, they're both going somewhat horizontally, but overall, their trend is sideways. So I gave, and the red RSI is at 44, or was at 44.77. I gave that a crab. The blue CVD line was at 1.813 million, and I gave that a crab too. The white momentum indicator is chopping upward, even though it's currently bending down. The last several days, it's trending upward. So it can chop up and down, but overall, it's trending up. So I gave that a bull, even though it's bending down right now. Overall, as a summary, before we do the summary, max pain for the next 4 periods, for the 19th and the 20th, will be 40K. For the 22nd and 29th, will be 42K. So it's going to be near around that area. My summary for this chart is that BTC is likely to chop between 39.6 and 39.6 is roughly right where this green support line is. And 41.5, which is roughly where is that? 41.5, right up here. Yeah, right there. So it's gonna chop in that area, and we'll see what happens. So you can see I gave it 2 crabs and a bull. I think it's gonna go up slightly. It's going to chop, but there's a tendency for it to go up slightly, especially with what KDJ is showing here. And then MACD is rounding up. But these are momentums overall also building up too. So take a look at that. Let's take a look at some more charts and see. Let me save this chart first. Here's the, just show you the charts where the options max pains are 40, 40, 42, and 42. And the volume and open interest for options, a couple days we want to take a look at. Volume are, what is it? Not transactions, they're contracts. Volumes are contracts that have been filled already. So we got decent amount of volume here on the 22nd, 29th, it trended down slightly. May 27th is where it's gonna had a lot of volume already booked. But on the open interest, those are contracts that are still open and pending. 22nd, it's nothing to write home about. 29th is a decent size here, and June the 24th has got a high open interest here, especially for calls. Calls are contracts that are to sell their options. They have the option to sell, but not the obligation. Okay. Here's the heat map for when the Bitcoin dropped right here, and that was roughly just after 2000 hour Pacific Standard Time. There was that big drop right here, and that's not organic. That was whales or someone with a decent size amount of money. Drop here, went down, and then notice the slight increase over time, and then pop up here. And this one is not organic either. That's smart money or whales buying all that up, and that's where we are here. And for cumulative volume delta, you can see during this period here was more aggressive sells here. Aggressive sells are market orders, not limit orders. And here are aggressive buys here. And again, that's market order buys. And here you can see the meter here. It's not even halfway. It's more aggressive buys and then aggressive sells, but not too bad. It's about average aggressive buys. Neutral would be in the middle, right up here. Here's the heat map showing you sell walls on top, buy walls on the bottom. We have the 50 sell walls still there. We got buy walls at 38, pretty thick here. And a 35K, 32K, 30, 25, and a slight one at 20. and liquidation levels. For the cumulative liquidation levels delta, that's the difference between the money in the shorts, put levels up here, and long levels down here. So let's take a look what happened. So back here, right around here, after the descent into 38.5, you can see Bitcoin, at least this is only on Binance, and for high leverage, 25x to 100x high leverage levels only. So here it got to roughly around negative $3.7 billion. Negative means that it's there are more shorts, money in shorts. And so here are the short levels, here are the long levels. The money in the short levels back then up here, minus the money in the long levels, the high leverage levels only, it was $3.7 billion. Then as price started to trend up, those short liquidation levels up here got liquidated. And so it dropped to 1.29 right around here. Then price shot up and eliminate all those shorts. Not at least the ones within this price range here. All these levels got liquidated. And then now we have excess longs here. That's why it's showing greens. So we have the money in the long positions here minus the money in the short positions here. You get this, and it's small, so it's nothing to write home about. So at this time, high leverage position won't impact the price or influence the price movements. And that's it. I appreciate your time, and feel free to smash the like, ring my bell, hit subscribe if you haven't, and share your thoughts, and share my analysis with your loved ones. Peace. I'll see you in the next video. I have one more today, and that's for Matic Monday, Polygon Matic. I'll see you then. Peace.